I will be sharing the 5 strategies for trading the pound US dollar on a 1-hour time frame using an expert advisor portfolio. These strategies have shown impressive results, yielding a remarkable 439% overall return with consistent monthly profits over 24 consecutive months, as I highlighted in my previous video. One of the standout features of Expert Advisor Studio is its ability to import previously generated expert advisors for further analysis and indicator examination. Here's how I do it. First, I retrieve the MT4 or MT5 Expert Advisor files. Within Expert Advisor Studio, I navigate to the Validator section and effortlessly drag and drop these Expert Advisor files into the designated Strategies area. Since I generated these Expert Advisors a week ago, there have been some updated to historical data which prompting me to reconsider optimization or conduct Monte Carlo robustness validation once again. A simple click on Start sets the process in motion. Out of the initial 20 expert advisors, each successfully passes the normalization validation, but only 15 prove their mettle through Monte Carlo evaluation. These select 15 expert advisors become my focus moving forward. Interestingly, even with a reduced number of expert advisors in the portfolio, the trading performance remains consistently profitable over a 2-year period, while the net profit experiences a slight reduction of around 23%. This adjustment is offset by a noticeable decrease in drawdown, emphasizing the effectiveness of the chosen strategies. Sorting the list by net balance, I will delve into the specifics of the 6th to 10th strategy. Let's kick things off by unveiling the details of the strategy ranked 10th and then work our way up the ladder. Strategy ranked 10th. This strategy harnesses the power of 2 indicators. A well-defined stop loss of 67 pips is coupled with a trailing stop, while the take profit is set at 90 pips. Position closure is triggered by an opposing entry signal. To initiate a buy trade, we await the alligator lips crossing the jaws in a downward direction. Specific parameters for the alligator are visually depicted on screen. The strategy closes a buy position when the fast-moving average with a period of 145 drops below the slow-moving average with a period of 163. Closure can also be prompted by the trailing stop loss, standard stop loss, take profit, or a sell condition. The sell side mirrors this process, wherein a sell trade is initiated upon the alligator lips crossing the jaws upward. The sell position concludes if the 145 period moving average rises above 163 period moving average. Comparable triggers for position closure include trailing stop loss, standard stop loss, take profit, or a buy condition. Strategy ranked 9th. In this strategy, a tandem of 2 indicators takes the lead. The stop loss is firmly set at 78 pips, and unlike the previous strategy, no trailing stop is employed. A specific take profit level is not established, similar to its counterpart. This strategy also hinges on an opposing entry signal for position closure. For buy trades, the condition is set to trigger when a bar opens below the simple moving average with a period of 356 after initially opening above it. The underlying parameters for the moving average are visually displayed for reference. To conclude a buy position, we look for the accelerator oscillator to cross the 0 level in a downward trajectory. Furthermore, triggers for position closure encompass trailing stop loss, or a sell condition. On the sell side, a trade is initiated when a bar opens above the simple moving average with a period of 356 after opening below it. The sell position is brought to a close when the accelerator oscillator crosses above the 0 level. As with the buy position, triggers for closure encompass trailing stop loss, or a buy condition. Stay tuned as we delve into the intricacies of the remaining strategies, unraveling the precise details behind their success in trading the pound US dollar on a 1-hour time frame. Strategy ranked 8th. This strategy leverages the insights of 3 indicators. The stop loss is conservatively set at 66 pips, accompanied by a trailing stop. Interestingly, the take profit is positioned at 34 pips, roughly half the value of the stop loss. The strategy initiates a close position command upon encountering an opposing entry signal. To engage in a buy trade, we await the downward crossing of the commodity channel index with a period of 303, coupled with the downward sloping moving average of oscillator. Subsequently, the buy position concludes when the alligator lips cross the jaws in a downward trajectory. Alternatively, triggers for closure include trailing stop loss, standard stop loss, or a sell condition. Notably, this chart highlights 2 consecutive winning trades, which is certainly encouraging. On the sell side, the strategy unfolds with a similar premise, albeit in reverse. We initiate a sell trade when the commodity channel index with a period of 303 crosses the level 93 upward, accompanied by the upward sloping moving average of oscillator. The sell position is then brought to a close upon the upward crossing of the alligator lips over the jaws. Likewise, triggers for closure encompass trailing stop loss, or a buy condition. Impressively, this chart showcases an even more appealing streak of 4 consecutive winning trades. Strategy ranked 7th. The 7th strategy in our lineup also incorporates 3 indicators. Here, the stop loss is firmly established at 64 pips without the application of a trailing stop, while a specific take profit level is not defined. Similar to previous strategies, the position is closed upon encountering an opposing entry signal. To initiate a buy trade, we wait for the bar to open below the simple moving average with a period of 370, subsequent to its initial opening above. The buy position concludes when the Williams percent range with a period of 274 falls below the level of -81.2, accompanied by a downward shift in the MACD line. Additionally, triggers for closure encompass trailing stop loss, standard stop loss, or a sell condition. The reverse indicators signals hold true for initiating and closing sell trades. Notably, this strategy reveals a busy trading pattern, with a series of sell trades immediately followed by buy trades. Despite this activity, the chart highlights an impressive outcome of 7 wins and only 1 minor loss trade. Strategy ranked 6th. Strategy number 6, utilizing 3 indicators, employs an 85 pip stop loss without a trailing stop. The take profit is set at 45 pips, a value roughly half that of the stop loss. The position is terminated upon encountering an opposing entry signal. For buy trades, we initiate action when the Williams percent range with a period of 174 crosses the level of -25.8 downward, coupled with a higher MACD line compared to the signal line. The buy position concludes when the stochastic line dips below the signal line. Additionally, triggers for closure encompass trailing stop loss, standard stop loss, or a sell condition. Impressively, this chart showcases a run of 3 consecutive winning trades. On the sell side, we engage in a trade upon the Williams percent range with a period of 174 crossing the level of -25.8 upward, alongside a lower MACD line relative to the signal line. The sell position is brought to a close when the stochastic line rises above the signal line. Again, triggers for closure encompass trailing stop loss, standard stop loss, or a buy condition. Notably, the sell trades here display an even more impressive sequence of 4 consecutive wins. As we progress in unraveling these strategies, I would like to note that, to keep the video concise and engaging, I will share the details of 5 strategies in this segment. In the next video, I'll delve into the top 5 strategies that make up this compelling expert advisor portfolio. A fortunate aspect is that I've been able to bypass the intricate task of strategizing on my own, thanks to the remarkable capabilities of Expert Advisor Studio. This platform has shouldered the burdensome work, allowing me to delve into these strategies with clarity and confidence. If you're enticed by the possibilities, I urge you to embark on your own journey of exploration. Simply follow the provided link and immerse yourself in a 15-day free trial. During this period, you can freely generate numerous trading robots and seamlessly integrate them into either your demo or real MT4 or MT5 accounts. Your potential for discovery and growth is limitless. If you've found value in this content and have gained useful insights, I kindly invite you to show your appreciation by liking this video and subscribing if you haven't already. Don't forget to hit the notification bell so you won't miss any of my upcoming videos. Thank you for staying engaged until the end of this video. Until next time,